Ahead of the Bank of Japan meeting this week, the yen is close to its November 2014 highs. From a technical analysis point of view, we're seeing a long-term head and shoulders pattern developing here, a completion of which would see the dollar yen below 102. Just to keep on this chart just for a minute, I want to show you exactly where the support then comes in. If we go below that, you then have to go all the way down there to about 94 as the next line of support. But this head and shoulders, you must bear in mind that this is a US dollar against the Japanese yen chart. So this shows the dollar dropping against a strong Japanese yen. Alex Lydall joins us now on the phone from Foenix Partners to look at where he sees the yen going. Alex, first of all, explain just what it is that's taking the yen up. The economy is not recovering as the authorities had hoped. The Japanese central bank is one of the banks that carries negative rates. So why is the yen so attractive?
Oh, hi there, Jeremy. Yes, you're right. The dollar yen has seen a significant downturn in the last couple of weeks. In particular, from a macro basis, well, that is the key for me here. From a fundamental perspective, the Bank of Japan is probably quite worried. It's a big exporting economy. They've suffered for years from a demand and economic growth perspective. Being one of the largest traded currencies that we have from a majors perspective, it is a bit of a predicament. They're very keen, the Bank of Japan, to see dollar yen a little higher, but in the big picture, around the 105 level, whilst the technicals do come in, it's largely a risk appetite play. By that I mean we're currently seeing a reasonable amount of risk off. We've seen German, UK and Japanese sovereign bond yields around historic lows. We've seen bonds flying, and thus risk appetite is really on the table. It's as well as probably being driven largely from a Brexit point of view, and then certainly the Federal Reserve as well, who will meet tomorrow night, will have a big influence on potentially from a macro perspective where dollar yen goes in the coming days.
Yeah, I mean, I want to get back, if I can, to the chart as well. The head and shoulders trade would indicate a move to below 102, and of course we must remind ourselves that this move below is yen strength, because it's the US dollar moving down against this Japanese yen. Do you think the 102, sub 102 level on this chart is a reasonable trade for you in the current cycle?
For me, whilst the head and shoulders pattern is there, and I can understand why a lot of technical traders will look at that. There is pretty good support. If we're just looking on a weekly chart, for example, there's pretty good support just above 105. If things are continuing, and by that, if risk appetite, if it's very much risk off, i.e. uncertainty around the Brexit, and if, for example, the Fed tomorrow cite global headwinds and anything alike, then yes, the trend would likely continue. Exactly how far and how quickly that would occur is quite tough to say, but the 100 mark is certainly within reach.
When will we see the authorities intervene? Because the Japanese authorities do have a record here of intervening when things get a little bit tough for the yen, when the yen gets a bit too strong. Do you see the authorities coming in?
There's a lot of speculation around it, yes. Without a crystal ball, it's always hard to say specifically. But they haven't intervened since it's back late 2011, where there was a lot of change, but internally within the Bank of Japan. But we were around the 75 mark at the time. There has been some speculation. I know there were some CNBC reports, just to mention one specifically, that if dollar yen was dropping below the 110 mark, this was a few weeks ago, that there could be intervention. I think you have to take it in the bigger picture, really. We haven't seen intervention for around 5 years. Whilst it is definitely something that they're going to be thinking of, the 105 level isn't crisis state, really. It is only 2 or so years ago we're trading currently comfortably under 100. So if that's on the table, it will be a shock whenever any central bank intervenes. It's without any insider information, it's always going to move the currency markets quite significantly. But I wouldn't necessarily think it was on the table just yet.
Okay, Alex, look, we've got to leave it there, but thanks indeed there for joining us. FX strategist Alex Lydall there from Foenix Partners.